So, yeah, I just recorded a whole video about my watch list and I never hit the record video, or at least I thought I hit it, but I didn't. So, I'm doing it again. But welcome, guys. It is me, the Stonk Dad. I'm going to be going over my watch list right now for this week. I hope you guys had an awesome weekend. I had an awesome weekend. I'm dreading recording this whole thing over again, but it is what it is. I should be seasoning this and we're going to blow through it really quick. So let's get right into it. Okay, so here's my watch list for this week. I'm just going to read through it and then we can go over some of these things, and I'll flip through these tabs and show you guys what I mean once we read all this, okay? So usually what I do is I do a little summary of the previous week, and then we go over some of the game exposure levels and see what happened, okay? So what I said here is we're in the zone between 435 and 445, and I'm very okay with playing ranges, especially if flow is really bullish or bearish. If it shows me that it's bullish or bearish, it's easier to trade. So I'm perfectly okay with range trading. But that flow has to look really, really good for me to get into something. So as of right now, last week we were bouncing between 445 and 435. The 435 or the 439 and 440 level initially I thought was going to be the rejection point last week, but we did blow through it, and we kind of pivoted between that level a couple times last week. So this is the watch list that I posted last week, and this is what I said here. So we have resistance at 439, which is the positive gamma exposure level, and then the largest negative level is 440. So we did pivot. So if we go to the chart here on Monday, so this is the 439 level. We did on Monday reject that 439 level, but we came back down about $4 or $5 to the 435 level, and then we immediately just pumped right through the 439 and came all the way up to 441. So that gamma exposure level was blown through, and it gave us momentum to head back up towards the 445 level, which was the high of day on Thursday. So those levels I was really looking at. So above those are bullish, and then below them were bearish. So as you notice that we broke down below the 440 level, we did head back down towards the 435 level, which we bounced perfectly, and we pivoted there a couple times last week as well. So gamma exposure is doing a very, very good job telling us where these price points are going to pivot. And then if you coincide that with flow, it makes it super easy to trade, and it makes it really fun. So let's take a look at the levels that we're looking at for this week. So SPY is hovering around that 440 level, which we were talking about so much last week. So that's a pretty strong magnet. You could tell that if we were above 440, it eventually came back down towards the 440 level. And if we were below 440, it eventually came back up and acted as that magnet. So that I'm always going to be looking at that level as long as we stay close to it, right? So the bullish and bearish scenario going into this week, I feel like if we go above 441, if we go above that level, we could see the high of days on Thursday, which was 445. But if we head back down below 440, that will be bearish, and that should take us all the way back down to the 433 and 432 level, which I can show you right here on this gamma exposure chart. So this is the 441 level. So if you guys remember, positive gamma exposure levels act as resistance if we're below that level. So since we're at 440 right now, it should act as resistance as we head up towards that level. So that's the bearish scenario. If we do reject that, we could head back down towards this 432 negative gamma exposure level, which is the largest one. And we did get pretty close to that last week, and it still stayed pretty negative throughout that whole process. But if we do break above this positive gamma exposure level, we could definitely test the high of days on Thursday, which was 445, as you can see right here. This is the 445 level, and that should be the bullish scenario right there. Okay, so that is gamma exposure. Those are the levels I look for every single week. Let's talk about the economic calendar. We have GDP for quarter two, which is goods and services, inflation with goods and services on Wednesday, and then PCE price index on Thursday, which could cause a little bit of volatility in the market. So let's take a look at flow map here. real quick. Let's see, flow map. Okay, so what flow map shows you, it shows you the entire days, weeks, or months flow going into a specific expiration. So what I usually do for each of my weekly watch lists, I hit the week. So this shows all of last week's flow going to each expiration. So you can see that the 9/1, September 1st, which is this Friday's expiration, you can see that the put premiums are at about 12 million positive, and then call premiums are at 8 million. So that gives about a 66% lead for the Bears, in favor of the Bears, and then a 33% for the Bulls. So that kind of coincides perfectly with what we were talking about a little bit earlier with this gamma exposure chart. If we do pivot off that 441, we could head back down. So that data can always change, guys. So just remember that. If you take a look here, this can always change going into this week, especially Monday. That's why I pay attention to intraday flow all the time, because this could definitely change pretty quickly if we see bullish flow on Monday. So yeah, but that's just what I'm looking at every single Sunday. We are in favor of the Bears right now, but it can always change. So that's why I look at gamma exposure levels too. So that 441 level and 432 level as well. Okay. Let's see, what else should we talk about here? Okay, unusual options. So I usually like to do a little bit of a fun thing when I do my watch lists about some unusual contracts. So if you scroll down here, I'm looking at this SLV one, which is it goes pretty well with the GLD ones that I saw last week as well. So some of these precious metal ETFs are pretty cool to look at because they both run together. So SLV actually has the same expiration the GLD ones that I saw in flow. So October 20th, 2023, you can see some bullish flow going into this one. I'm looking at the GLD ones. Those are a little bit more expensive than these ones. So these ones are around like $20 per contract. But the GLD ones were like at like 130 or 140, which is perfectly fine with me. But yeah, these precious metals are getting a lot of flow, bullish flow, so keep on a lookout for that. Then the other one I saw was Nikola. Now this one I'm not too certain with because there were both calls and puts on Nikola. You can see here that this was a one strike for this week expiration, and then if you go over here, you can see a bullish one for next week for the 8th of September expiration for the 1.5 strike. So take that with a grain of salt. There's a lot of volume going into both calls and puts, so just be aware of that. But I put it on the watch list regardless. It's kind of fun to watch those. But I'm going to be watching this one, SLV, as well as GLD for bullish momentum going into this week and for the next month or two as well. Okay. I think that's pretty much it on the watch list. Yeah. I have everything written out here. It's just a little summary that I have written out. If you want to see this, and it's better for you than just listening to my stupid mouth run, you can go on Discord. I have it on Oasis and Stoxios as well. Okay. But that's pretty much it for this video. I'm going to be posting a convergence and AI tool video, which is going to be next right after this one. So I'm going to be recording that and then posting that today as well. So if you guys are interested in the win rate of convergence and how we win trades and stuff like that, watch that video. So I will see y'all in the next one. Make sure to like and subscribe. And if you have any suggestions for me on watchlist content, please feel free to comment down below. And I'll see y'all in the next one. Thank you.